What's up, you guys? Boris Portnoy, New Jersey, Bergen County Realtor. We're talking about foreclosures today. Oftentimes, I work with clients who are facing foreclosure to arrange for a loan mod, a short sale, and most times they just aren't aware of their options and perhaps they're hysterical. And the purpose of today's video is to educate everybody about the options available to you when you're facing a foreclosure. It's imperative you understand you have options available to you, and it's imperative you don't become hysterical about the circumstance. Because becoming hysterical is not constructive, nor is sticking your head in a hole and hiding. It's imperative you communicate with the banks your financial hardship, why your hardship has resulted in a loss in income, and the reason being is because the banks are not in the business of owning homes. They don't wish to foreclose on your home. They're incentivized for you to get current on your mortgage again. They want to work with you to try to get you back on the loan modification program. If you express your financial hardship, there may be solutions available to you to get you back to becoming current on your mortgage. But if you do not communicate with them, if you throw out all your correspondence, if you stick your head in a hole and hide, all you're going to do is be expediting the foreclosure process. All right, you guys? So before we jump into the options, let's discuss the timeline. When you're 90 days delinquent on your mortgage payment, the banks are going to provide you with the notice of default. They're notifying that you have defaulted on the repayment terms of your mortgage. If you continue to be in arrears on your mortgage payment, 6 months go by, they will initiate the foreclosure process. New Jersey is a judicial state, meaning that banks are required to go through the court system to foreclose on your home. So the foreclosure process typically takes 18 to 24 months from when they file suit against you. So if you are passive about the circumstance, if you don't contest the foreclosure, you could anticipate losing your home 18 to 24 months from the commencement of that lawsuit, approximately, give or take the court dockets. All right? So that's the timeline. Now, let's discuss the options now available to you. Obviously, number one, the most ideal circumstance of this terrible circumstance, the most ideal is if you have equity in your home, you're in a position to sell your home, walk away with some equity to get you back on your feet. However, not everybody falls within that ideal circumstance. Not everybody has equity in their home. And if you don't have equity in your home, there's still options available to you. It's a dire circumstance, but don't become hysterical. Number one, let's entertain a loan modification. Like, just to reiterate, communicate with your lender. Now, you could oftentimes do a loan mod on your own. A realtor who's experienced can help you out with this. They typically do. They don't charge for loan mod. They don't charge for loan mods. A realtor won't charge you anything for a loan mod. So definitely, I'd encourage you to reach out to a realtor who knows the process and knows how to work with various banks. Different lenders have various guidelines. Now, before we jump into the guidelines of a loan mod, I just want to put this out there. There's a lot of misunderstanding. People are under the impression that you must be already in default or even in foreclosure to be eligible for a loan modification. That's simply not the case. In order to be eligible for a loan modification, you simply need to be in danger of being in default. You don't necessarily have to be in default. There must be a probability of you falling behind on your payments to be eligible for a loan modification. So if you could document this through financial documents to your mortgage lender, you can qualify for a loan modification, okay? But today we're discussing people who are actually in default, who are actually in foreclosure, okay? But if you aren't in default, but you're in danger of becoming into default, reach out to me. There's options, okay? Don't wait to become into foreclosure. Don't wait for that date. Be proactive. I always tell everybody, be proactive, communicate with your bank, save all your correspondence because your lender's going to want to see all that mail, all right? They work for you, all right? You got to be upfront with them and give them all the documents, your lender, all right? So in terms of loan mods, it was previously a program called HAMP, Home Affordable Modification Program. This was an Obama-era program, which had expired in 2019. Trump hadn't renewed it. It's no longer an option available to us. However, this program, lenders were previously required to negotiate with you for a loan mod. Now, even though this program is no longer available and lenders are not required to negotiate loan mods, they oftentimes, most of the times, are willing to do so. The reason being is why we just mentioned, because they're incentivized to get you current, not to take your home from you. They want to get you current. They want to come up with solutions to get you current. So oftentimes, they will work with you to get you into a loan mod. So now I'm going to discuss the HEMP guidelines. Now, even though HEMP is no longer an option, banks are still modifying loans similar to HAMP guidelines. So you could anticipate an offer proposal from the bank similar to HAMP, what HAMP had offered previously. So there's 1, 2, 3 options available to you to get under HAMP. So HAMP, the purpose of HAMP is to get your mortgage, taxes, and insurance payment to an affordable level. Affordability is under guidelines, under HAMP guidance, affordability is 31% of your gross income or below. So in order to get your payment down below, there's 3 available tools to do so. They can lower your interest rate temporarily to as low as 2%. Option number 2 is that they could re-amortize your loan to a 40-year term. Option number 3 is the amount that you are in arrears on your mortgage, they could forbear it to the back end of your mortgage as a balloon payment. The rationale in a balloon payment is that 30, 40 years from now, you'll have equity in your home at that point, and you'll be in a position to sell your home or refinance your home and pay off that balloon payment. So those are the 3 options in which people explore to try to get you into loan mod. If those 3 options aren't able to get you down below 31% of your gross income, then you simply won't qualify for a loan modification. Sadly, most individuals who are in foreclosure don't qualify for a loan modification because the hardship they've encountered has resulted in a decrease in income, so even a loan modification can't make their payment affordable, and oftentimes they are declined from a loan modification. Option number 2, reaching out to a bankruptcy lawyer. A bankruptcy lawyer is not cheap, and oftentimes a bankruptcy is not a viable option. I'll discuss why it's not a viable option, but you got to be aware that bankruptcy lawyers aren't cheap. They're good for one thing, they definitely delay the foreclosure process. The moment you file for bankruptcy, foreclosure is halted. So yes, you'll have more time in your home, but most of the times people don't go through the bankruptcy process because it's simply not a viable option, and I'll tell you why. There's 2 forms of personal bankruptcy. There is Chapter 7 bankruptcy and Chapter 13. Chapter 7 is when you are forced to liquidate your assets to repay your creditors. That's not a viable option to keep you in your home because you're forced to liquidate your home to repay your creditors. So you aren't keeping your home. That's not a solution people are really interested in hearing. Option number 2 is Chapter 13 bankruptcy. Chapter 13 bankruptcy is in which you arrange for a repayment arrangement where you repay all your creditors within a 3 to 5 year repayment plan. That's usually not a viable option either because it's not affordable. You're still paying your principal mortgage payment. Now you're paying an additional payment to repay all your creditors which are in arrears within 3 to 5 years. Most people can't afford that option. That's why bankruptcy typically is not a viable option for most individuals. Plus, you're incurring a lawyer's fee as a result. On top of that, it's definitely constructive in getting you more time in the foreclosure process. But ultimately, most people don't go through foreclosure. All it does is buy you time, and it's not cheap. Buying you time is not cheap because lawyers and court fees aren't cheap. So, if a loan mod and a bankruptcy is not a viable option for you,
there's a slowdown ahead.
At this point, you want to negotiate a short sale. A short sale, you definitely 100%, well, I don't want to say 100%, 90% of the time you need a realtor. The reason being is because most lenders require that you list your short sale on the MLS, the multiple listing service, because they want to get top dollar for the sale, and they would recognize that the MLS will get them their top dollar. So they require that you list it through the MLS. So the loan, here's how the short sale process goes. You typically put together a hardship package where you express the financial hardship in writing and you provide all your financials documenting your hardship. You send it out to the bank. When they're considering your hardship, whether to approve your short sale, they're going to send out an appraiser to your home to get an idea of what your home is worth. Once they appraise your home, you could anticipate they'll approve a short sale number somewhere in the ballpark of 82 to 90% of the appraisal amount. Now that number could go down over time. If it's sitting on the MLS for a month and it's not getting offers, then the realtor can communicate with the bank.
Welcome to New York.
You need a lender to help you to get this done to improve the likelihood of getting that short sale done. Now let's discuss why a short sale is more beneficial to you than allowing your home to go into foreclosure. Because oftentimes people say, "Well, I'm frustrated. I'm not getting."
There's a slowdown ahead.
I'm just gonna throw up my hands up in the air. I'm just gonna stay in my home until the sheriff's office comes knocking on my door and evicts me. I'm going to discuss why that is not a better solution, why you should definitely work with the realtor to negotiate a short sale if a loan modification and a bankruptcy has not been fruitful. All right, so number one, it's much less detrimental on your credit report. Undeniably, your credit report is already messed up and bruised because you're already falling behind on your payments. But nevertheless, a short sale is far less detrimental on your credit report than a foreclosure would be. In fact, in order to qualify for agency lending, which is Fannie Mac and Freddie Mae lending, you need to have allowed 3 years to go by after a short sale before you qualify for another mortgage. As opposed to going through a foreclosure, you have to have waited 7 years. So your credit report is less impacted. You qualify for a mortgage much sooner if you go through a short sale as opposed to a as opposed to a foreclosure. Number two is that the banks will discharge the deficiency amount. The deficiency is the difference between the amount that they had short saled and the amount that you owed. That's the deficiency. In the case of a foreclosure, if they sold it for less than what you owe, you're still on the hook for that amount. And the banks have every right to sue you and obtain a judgment for the difference. Now, in the case of a short sale, the banks, when they agree to the short sale, they are waiving their right to pursue you for the difference, which is amazing. You're no longer on the hook for the difference. And oftentimes it could be over hundreds of thousands of dollars. And you do not want a judgment looming over your head for 10, 20 years for that amount of money. However, you need to be aware of the tax implications. If you do a short sale on your home, you are on the hook. The IRS will give you a 1099. They will seek to recoup. They will seek to recoup taxes on the amount of your savings, your delinquency. Your deficiency. So once again, in the case of a short sale, a deficiency is the difference between the amount you had owed and the amount they had short sale. The short sale closed for. That's called a deficiency. Now, the banks will forgive you for that amount. However, the IRS views that as income. Even though it's really not income, the IRS views that as income, and you will receive a 1099 to pay taxes on the amount of your deficiency as income. There was a Tax Forgiveness Act in which people prior to 2017, I think it was, people who had short sale prior to 2017 or perhaps 2018, they were not liable to pay taxes on the deficiency amount. However, once again, President Trump hadn't extended that program, and now you are liable to pay taxes on that. So that's something you must be aware of and speak with your CPA. I hope you guys understand the options I discussed to you. Why being passive about the circumstance is not the best solution. You need to reach out to a licensed realtor who understands short sales, who understands the different lenders' requirements. Another thing that comes to mind, why you should always deal with a realtor. Another thing that a program that banks often provide is relocation assistance. In the circumstance of a short sale, some banks, not all of them, and some pay less, some pay more, will pay you relocation assistance to get you back on your feet in the event of a short sale. If you don't ask for these things, oftentimes they'll neglect it and make you aware of them. But however, realtors who work with this industry frequently know which lenders provide relocation assistance, which do not. And if you simply work with somebody who has no experience, you'll probably miss out on opportunities like this. And sometimes relocation assistance can be as much as $20,000. And that could be really helpful for somebody who's trying to get back on their feet after foreclosure and who's going to incur a big tax liability in the form of a 1099 from Uncle Sam as a result of a short sale deficiency. So I hope I provided some clarity today. Thanks so much for listening, you guys. I just want to tell you guys, don't be hysterical. Work with a realtor, work with a lawyer, discuss your options, and be proactive. Don't be passive about the circumstance. Thanks so much, you guys. Good luck.